You're listening to the retirement architect, David Reyes. We design and build retirements that last a lifetime.
The silent killer. Who said this? Inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. Sounds kind of scary, doesn't it? Well, that was Ronald Reagan in 1980. And inflation is a very, very important topic. And I call it the silent killer. I've actually written a book, I'm writing a book called The Ultimate Retirement Blueprint. It'll be my third book. And one of the sections is called The Silent Killer. And we're going to talk about this a little bit today. And the reason it's a silent killer is again, it's not something that you can see, touch, or feel really. I mean, obviously you can feel gas prices go up or food costs go up, but most people don't realize it's going to cost them $250,000, cost you, just in your own health care. And that's not including long-term care, which is on average another $250,000. And inflation is something that people don't realize. At a 3.5% inflation rate, your income actually has to double over a 20-year period. So let's say you're 65 years old and you're living on $100,000 a year of income between you and your husband. You're going to need $200,000 by the year 2033 just to have the same value of that dollar. People don't realize the value of our dollar has gone down about 80% in the last 50 years. And so inflation is a really, really big deal. And it's something that we incorporate in our planning for our clients all the time. When we do our written retirement plans, which, again, most of you don't have. I've yet to see a client that has a written retirement distribution plan. All of our clients have one. And if you're interested in receiving one and going through our second opinion processes that we talk about, give me a call at 877-406-CALL, 877-406-2255, and we can help you with that. Again, you can always reach us on the web at reyesplan.com. That's REYESPLAN.com. I was reading an article about this very topic, and the headline was, how inflation affects a portfolio. And it's in a publication. It's a professional journal called On Wall Street that I read daily. And it kind of amazed me because we use inflation figures around 3.5%, which is considered, that's considered normal. Right now, our inflation is about, 1.5 to 2%. But according to this article, in the years since 1970, the median annual rate of inflation as measured by the Consumer Price Index has been 3.37%. The average rate over the past 44 years is actually a lot higher. It's 4.27%. And the average is higher because it's skewed because there was 3 years, 1974, 1979, and 1980, that, believe it or not, inflation exceeded 12%. So our 3.5% average or median inflation is still very accurate, even though you have this average for the last 44 years of 4.27 with these high years of 74, 79, and 1980, which again exceeded 12%. And so if we know that we're going to need twice the amount of income during our retirement years due to inflation, the question is, what do we do about it? And can we include in our retirement planning a plan for inflation? Basically the reason that people supposedly own stocks is to outpace inflation. Okay, and that's kind of the generic answer. So if you want to outpace inflation, you own stocks. You don't own bonds, you own stocks. Well, unfortunately for a lot of people, I can tell you that, that's not the magic pill because, people that as you become more retired, if that's a word, or if that's a phrase, you're going to be more risk averse. And so just buying a bunch of stocks is not the answer. So what is? And another thing that was interesting, and we'll talk about that. I'm going to give you some examples of some strategies that we use for clients. But the thing that was really interesting to me in this article is that really during inflationary periods where inflation was above the average or the median, stock rates of return were 1/3 that of what they were when inflation was under the median, or let's say the 3.5%. in this article, 3.37. To give you an example, during years where you had below average inflation, the stock market averaged the S&P 15.89%, and during years where we had above average inflation, it averaged less than 7 or 6.4%. And a lot of people would argue right now that we're going to have, or we're poised for high inflation. So, with tapering happening and the federal deficit at 17 trillion and climbing, I remember last year was talking about 16 trillion. And that's at a deficit where you have low interest rates. Imagine what's going to happen as interest rates rise and a bigger part of our budget becomes the cost of interest on the national debt. It's kind of scary to think about. So what do you do? That's the question. So what do you do in a safe manner? Again, we're trying to protect and grow assets. And so we don't just want to take on more risk and buy stock, which is kind of the generic answer to fight inflation. So one thing that we do use quite a bit of is that there are investments that are actually investments that have inflation protection built in. One of them is Social Security. And one of the things that we teach, and we teach classes on, is Social Security and how to maximize your Social Security. But Social Security has a cost of living adjustment. It's averaged over 3% annually. And if you delay Social Security between the ages of 66 and 70, you can actually increase on a year-by-year basis your income by about 8%. So it pays to wait. So that's one strategy we use, is maximizing Social Security to make sure that we increase our income and also get the highest cost of living that we can over our lifetime based upon a higher number that we hopefully are going to receive. But one of my favorite ways to insure against inflation and protect the portfolio is actually having built-in inflation cost of living riders in the investment. Believe it or not, you can do that. Now, can you do that with a stock? No. You can't make sure that your IBM stock keeps pace with inflation. Can you do that with a bond? No. Actually, bond valuations will fall during inflationary periods. And so we want to be careful right now about our bond portfolio. So getting to the how, there's certain investments, certain annuities actually, that will allow us to have inflation protection. And there's not a lot of them. There's only a couple. And as an independent fiduciary, we have access to all these different investments. So I can give you an example. So let's say that we make $1,000 a month of income. And that income rises, inflation rises, 3%. How would you like to get a 3% increase in your income? What if inflation increased 8%? How would you like to get an 8% increase in your income? Well, there's a specific product that will actually allow us to do that, up to 10% of what the CPI is. And it's the only one I'm aware of that does that. And so we can actually get an income stream, a lifetime income stream, plus we can get an increase for the cost of living up to 10% on a year-by-year basis. So if you're interested in something like this and how to protect what we consider the silent killer and not kill your portfolio, give me a call at 877-406-2255. That's 877-406-2255. Or you can reach us on the web again at reyesplan.com. That's REYESPLAN.com.
You're listening to the retirement architect, David Reyes.
Oh, really? A professional man.
We design and build retirements that last a lifetime. The retirement architect, David Reyes, will continue next.
Business owners. Some of you have worked 20, even 30 years to build your business. You're ready to sell your business and go into retirement, but you don't want to risk or lose any of your hard-earned money. How about 401k owners? Have you recently changed jobs and have a retirement account you don't want to see disappear due to market losses? If you have money you are counting on for retirement, the team at Reyes Financial Architecture can make sure you sleep at night with principal protection from market risk and a return that will create a predictable income stream that will rise with inflation. Don't stay on an elevator that may be heading for the basement. Revive your retirement. That's advanced planning, and now you can have it. You don't have to settle for the ordinary. Call Reyes Financial Architecture now at 877-406-CALL. That's 877-406-2255.
Have you recently changed jobs and now you have a 401k or other retirement account you don't want to risk in the market? You've worked too hard to leave your retirement to chance. Since you'll probably start another retirement account at your new job, why not make sure nothing happens to your last one? David Reyes with Reyes Financial Architecture can help you roll over your retirement account from your previous employer and give you principal protection from market risk. Be confident of your plan. Call Reyes Financial Architecture now and ask about receiving a complimentary review. Don't leave anything to chance. Call David now at 877-406-CALL. That's 877-406-2255.